Do you ever feel that when you make a profit and move a step forward, you immediately lose money and find yourself right where you started? Well, today's video is going to make sure that does not happen because we're talking about the 3 biggest mistakes that traders first make when buying stocks. Also, if you were wondering what's going to happen in this trailer, the mystery or secret is not making the mistakes that other traders will. The first, biggest, and most common mistake is not cutting losses quickly. One of the most enduring sayings on Wall Street is cut your losses short and let your winners run. Wise advice, but most investors still seem to do the opposite. Selling stocks only after a small gain, only to see it go higher, and holding a stock with a small loss, only to see it lose more. This is very common, an ordinary human mistake. You will never be correct on all of your trades, even though many traders refuse to admit it. But as a trader, you cannot afford this. You have to admit to when you make a quick exit or have stayed too long with a particular trade so you can learn from it and not make the same mistake again. At the same time, you need to predetermine your risk by answering questions like, what is the ratio of risk to reward? How much risk are you willing to take? When to enter the trade and set your stop loss, and so on. Setting a stop loss immediately after entering a trade will protect you from incurring huge losses. But even after me saying all this, you'll probably still make the same mistake. Why? Because your brain is wired to avoid losses. Human beings are meant to have the tendency for loss aversion. So when you try to cut losses, you'll find it hard to because your mind will tell you to wait until the stock you have comes to a place where you get a profit. But to try to help you as best as I can, let's talk about how you can best follow this golden rule. Smaller profits means cutting losses even quicker, so if you see that the news for the stock is going downhill, sell. If your stock is more than 3 or 4% down, sell. But don't wait until it's 8 to 10% down. Now we'll talk about the next thing, letting your emotions take control of your actions. Financial markets are a perpetual battle between the bulls and the bears. Apart from the highs and lows, an investor also has to battle with his or her mind, heart, emotions, and gut. It's the constant push and pull of fear and greed. That's what pushes us towards psychological trading mistakes. Greed is a good thing because it motivates you to work hard and learn. But fear is also a good thing when it prevents you from taking part in foolish, sure loser trades. However, decision making must be done only after thorough analysis, and our emotions must always be kept under control. First, you must learn to do the fundamental macro analysis of the company, slowly going deeper and deeper. Only then will you be able to establish the discipline of following your trading plan and taking apt decisions. And I'll repeat it one more time. Your brain must control your trades, not your emotions. Another thing you have to make sure is that you have a plan when you buy a stock. If you don't, you'll be confused and might miss out on other opportunities. The final mistake that most traders make is listening to everything they see on the internet. There are a lot of stock picking websites that tell you what stocks are best to buy, and sometimes they're right, but you have to know which ones to believe and which ones not to. Also, you have to do your own company research on top of what you read in the articles. You also have to see the company's financials, how the stock trend has been, what the outlook is, and why the company is being recommended in the first place. It's common to hear about the winnings while trading stocks, but rarely will you hear about the losses. As a result, emerging traders will get tricked into thinking that successful trading involves little knowledge. But the hard truth is that you have to constantly study your craft, looking for an additional edge that may help you to make more informed decisions. All humans make mistakes, but the more you research and learn, the easier it'll become to trade. I hope you enjoyed this video. We talked about the most common mistakes that beginning traders make and how to avoid them. Also, check out this playlist that includes all of our past videos. See you next time!